So there was a $2.9 million at the money strike call order for the 11:15 expiration on Meta Friday at 3:41 p.m. That's 19 minutes before the closing bell. This is very unusual for a couple of reasons. First of all, this is a lot of premium for Meta. 2.9 million is a significant amount. And I know we saw 3.1 million earlier in the session, but both of these orders have very different characteristics. For example, this was super deep in the money. And this also had a far expiration. This is the June of 2026 expiration. That's a far dated leap order. So in this case here, this doesn't help us that much directionally speaking because it's super deep in the money and has a far dated expiration versus something like this, which has 2.9 million premium, quite a bit as well. And at the money strike, like I just said, so this is a little bit more directional in terms of the bias it can provide us. And then a short dated expiration, you're looking at about 2.5 weeks until this order expires. Plus, like I just said, came in 19 minutes before the close on a Friday. That's very rare to see something like that. You don't see this type of premium hit the tape that close to the close on Friday unless they expect something to happen like Monday or Tuesday of that next week and they want to get in very quickly, hence the above the ask side of the order. That's why it was executed above the ask. So this right here prompted me to look at the chart because remember, just because we see an unusual order hit the tape doesn't mean I have to follow it immediately. That's not smart trading. It's not efficient trading. Maybe it worked in 2020 that way. It doesn't work that way now. I use TraderFlow as a means to scan for unusual activity and then use that as a basis to check other variables such as the technicals, indicators, etc. on a chart where then I can create my trade thesis, my entry, potential exits / trims, as well as a stop loss, because that's always important to have on your trade setup. So over here, I have the chart. I'm going to show you how I'm going to chart this, just a basic version. I'll chart this based on what we saw over here from this unusual order, because again, we want to pair multiple variables in conjunction with each other to then create our final trade thesis. So right here, we have a chart on the 15-minute. First of all, we have this on the daily. I want to show you this very quickly because this is important. We have a key demand zone down here. And if you remember in previous videos, we had a very nice inverse head and shoulder that broke out. It was a double inverse head and shoulder that broke out. You could see the left shoulder head, right shoulder, left shoulder head, and right shoulder. This is a very bullish, characteristically bullish setup you have. And we had two of them in a row here. So this broke out above what is now a demand zone, was a previous supply zone. So first things first, when I'm charting, I look at the daily to see macro-wise, is this in a bullish positioning, a neutral positioning, or a bearish positioning based on the technicals? And as long as we stay above this now demand zone, it is in a bullish positioning environment. So as long as we stay above roughly this 544 level, we're looking at dips to be bought just because of how significant this previous range was. Since this was the high numerous times, we're looking at like 4 or so times that it rejected before a lot more downside. So because we're above it, we're in a bullish positioning environment. So this is the first thing I look at. So that provides me with my bias that I'm going to have here with a buy the dip mentality. So now that I'm on the 50-minute, I'm going to share how I'm going to chart this over here. And because we're on YouTube, I don't like to make these videos too long, all things considered. So by the way, we are doing a free 60-minute webinar on my trade methods. So it's going to be very extensive on how I find and derive my stops, how I derive my entries, very specific entry points. Also, I'm going to go through some of my personal indicators, as well as how I like to scan a more robust way than just looking at one print like I'm showing you here in the YouTube video. So again, if you are interested in that, that link is in the description as well as the comments. You can sign up for that. It's completely free. It's going to take 60 minutes of your time. So nothing really required from your part other than just showing up for the 60 minutes. And that could potentially change how you trade completely, or at least give you a couple new tips for your own trading. So regardless, that is in the description. Click on that, very easy. Just put your name down and you can sign up for that. That is coming up next week. So you have some time until then. You can sign up below. Regardless, over here, to chart this, I'm going to start from the highest point. So this is the local high pivot, also happens to be the all-time high. But in this case here, local high pivot, and automatically, since we've been trending down, we know that there's going to be a downtrend. And there's two variations here. One would be the next highest level. So this is automatically a downtrend. Because we're not close to that right now, it doesn't help me with a potential setup for Monday or Tuesday, which is what I'm looking for because of this order we saw here, very time sensitive. So in this case, I'm going to go back over to here to the high point, and I'm going to look for other areas where this downtrend might have been respected. So for example, over here, we have a valid downtrend because This has been respected numerous times. We had a rejection here until it gapped up above. We have a couple rejections here, rejection end of day here, another rejection here, and et cetera, until we attempted to break above, fell back below, and now we're back above. So this is one variation of a downtrend. Is it a perfect one? As if we were to have this from over here. Not necessarily. I prefer downtrends like this where you take the first lower high that forms and then base the downtrend on that. That's always the perfect scenario. But in this case, since that's a ways away, we can't use that. We actually can technically. That's going to be one of my profit taking points. So keep that in mind. One of my profit taking points will be around 588, 589 because of this level here. But in this case, since we're looking for an entry and a basis of risk, I'm going to use this trend line here. Conveniently, there's a potential inverse head and shoulder as well, just based on this structure here on the 50-minute, and we can base it on the downtrend. So because we know it's been respected numerous times, we can use this area over here, which conveniently would form the right shoulder of this inverse head and shoulder. We have the left shoulder here, the head, and the potential right shoulder. We can use this area here as an entry level, and there's a nice convergence with this downtrend. So we have two variables in conjunction with each other that are going to help to maintain a supportive level around this area. And that's going to heighten the probability that this acts as a bounce spot. So that's always what we're looking for our entries. We want a high probability bounce spot because even if, let's just say it trades down to here on Monday, even if it bounces from here and it still eventually falls later, that's a lot easier to manage than if it just fell straight through like this. At least if it bounces initially, I can move up my stop or can keep in tighter stop on that position, like back under the level that I entered, versus initially something like this. We'll get rid of all this junk now to show you. Let's say we have it just falls straight through the level. If it fell straight through this level here, well, then I'm going to have to stop out somewhere around this level here, like 562.50, since that's the level that I'm going to use as my stop, and we'll get to that in a second. But regardless, I want to make sure that at least there's a high probability it bounces somewhat. So even if it were to fall back down, I'm not losing much, all things considered. And in this case as well, it should just continue to ride even higher, and we have that breakout move, and I can trim as it continues to go up at each of my levels and continue to make profit as it continues to go up. So this is the ideal scenario here, but as traders, we need to understand risk every time we enter a position. So I need to understand where is my stop loss. In this case, it's at 562 mid because this is the local low that's formed. So I'm looking at about 5 or 6 points of risk on here versus a lot more upside of that eventual target of 589 that I just spoke about before. So that'd be a decent risk reward, all things considered. You're looking at a decent amount in terms of percentage just based on the equity alone. That'd be 4%. Obviously with options, especially shorter dated options like the one the whale had here, that'd be significantly more in terms of overall profit. So to summarize what I have here, I'm looking at an entry somewhere around this 567, 568 level. And I'll get rid of these again to make it more obvious of what I'm looking at. But I'm looking at an entry around this circle here, want to see a response, that bounce from this level. And I'm going to continue to hold, and I'll profit take based on the previous resistances. So we know that this is a hard resistance over here because of all of this. We could see hard rejection here, hard rejection, and another hard rejection all around this 582.50 level. We can further optimize it by looking at where the body of the candle is. So just about around here, we had rejection of the body of the candle, rejection of the body of the candle, and then rejection of the wick over here on both. So we're looking at about 583, roughly speaking, as a good profit taking target. So initial profit taking, potential 1/2 of my calls I can take here, or 1/3, depending on how much you have of your position. I'd look at something like 1/3 up here. That's just my personal preference. It's going to be different for everybody, but I'd look to take about 1/3 profits around this 583 level. Always good to do that because in the case that we have a bounce from here and it goes up to this level, what happens if it just rejects and goes all the way back down? You either stop out for break even or you stop out for a loss lower, and you didn't get to take anything with you. So in this case, if you take 1/3 up here, at least if I stop out break even on the other 2/3 of the position, I was able to pocket something. It may not be as much as I wanted, but that's better than taking a loss on it and risking everything on that large move. So that's why I like to use something like that 1/3 trim technique. And that is something I will talk about more extensively, like I said earlier, in that webinar I'm doing next week. So if you want a little bit more info on that, again, you could sign up below. I'll shut up about it. I really am proud about what we're sharing in the webinar though. So that's why I wanted to share it here, because I'm annoyed with the time constraints. Just to not get on a tangent, I'm annoyed with the time constraints of YouTube. So I want to make sure I can talk a lot more in depth so you can understand everything that I have to share. And the best way to do that is long form content. So you can find that in the webinar, again, in the description. Regardless, looking for something like a 1/3 trim up here, another 1/3 trim around previous resistance. The next one would be around this range here, looking at around like 592. So we already know that'd be beyond where the downtrend that we talked about earlier would be. So this downtrend here, we're looking at that 588, 589, maybe 590. So this would be the next 1/3 trim on this downtrend. And then if it breaks out of that, you can continue to hold for either 592 or can go a lot higher, because this would be a significant downtrend break. You can hold for something like about 600 off of that, since this is a significant downtrend. So there's a lot of opportunities there. Just to keep it simple to the point, this is my thought process for entering trades, and not just entering, determining where my trims will be, where my stop will be, etc. And all of this right here, plus this, which is what made me look at Meta in the first place, is all a part of my trade thesis. You need to have a trade thesis every time you click the button to enter a trade. We're not gambling here. If you are a gambler, then you, first of all, probably aren't watching this video, I'd hope. But then second of all, you probably aren't around trading anymore, because gamblers have kind of gotten flushed out since 2020 and 2021. So they're far and few between now, just because you can't be consistently profitable gambling in the market, just trading whatever you want, whenever you want, and 0-day expirations all the time without having a strategy. You need to have a strategy. This is part of my strategy here. Just briefly, again, I can't go into it as in depth in a YouTube video, but this is what I look at, and this is all based on what I saw here in terms of the flow on Meta. So something like this pairs very nicely with my thesis based on technicals, because you'd be looking at a drop down around Monday or Tuesday here for a break higher. Now, one final comment I want to make, and it's a very important comment here, is we have earnings approaching on Wednesday. So there's a lot more risk. It doesn't mean that any of this is negated, because I do expect a quick move from here, but you need to be very careful when there's an earnings approaching. I do not like swinging through earnings. It's a little bit more of a layup, kind of near that gambling aspect that I just talked about. So I don't like doing it. It's not a consistent means of trading, since there's a lot more that goes into earnings versus price just trading around on a normal week. So you need to be careful of this earnings approaching. I'd be looking for a quick move up from here. And maybe this is what personally I'm looking for this week. Let's say we drop down Monday, retest the downtrend, the downtrend breakout that I showed you from before, as well as potentially form this inverse head and shoulder. I add somewhere around here, and then we have an immediate response through Monday and Tuesday higher. Well, I can trim 1/3 or maybe even 1/2 early around here, around my initial trim spot. And then I can have that other 1/2 or 1/3 of the position. I can swing that through earnings, because I have a little bit of a cushion. And I already have some profits on the position. This is still slightly risky, because earnings has pretty large moves, all things considered. But in this case here, at least I already have a cushion on the position. I still traded the setup that I wanted to trade. It's backed by someone that clearly is very bullish on it in the short term. So all of these variables you have to be aware of. This is all part of the trade thesis. You have to be aware of everything, including earnings, including CPI data when it's released, FOMC, etc. All that's going to have an impact on a ticker like Meta. It's part of the Mag 7. It's all going to have an impact. So you need to be careful of something like this. The only way I would swing would be a small portion of my position after I trimmed, and it already has a cushion. So keep that in mind, looking for some type of a short-term move before earnings on Wednesday. But if that doesn't happen, I'll wait, reassess after earnings, and then go from there. So that's my plan for this week on Meta. Wanted to share that here. One final thing and comment I wanted to make is this on QQQ here. We had a breakout. We'll get rid of these. So I was showing someone earlier what I was looking at. But we have these 3 lines on my chart here. The 2 red lines are a range that we were previously stuck in. So if you remember the annoying choppy price action from 2 weeks ago and then some of last week, this is because we were stuck in a range. And then we broke down in the range, and then we actually were able to reclaim the range, which means that all of this down here is a failed breakdown move. And typically with failed breakdown moves, you see a squeeze to the upside, because all of this acts as fuel, kind of like short squeeze fuel to the upside afterwards. And it's kind of what we've seen so far, although price came back down to close near the downtrend. So for this week, in order for QQQ to have a lot of upside continuation, continue with the squeeze, because right now we have 2 unfilled gaps. That's very bullish. 2 gap ups that remain unfilled is a bullish sign for any ticker for that matter. So as long as these remain unfilled, we can see a lot more upside from here. So you want to see it hold above this downtrend that starts at a local high, very similar to what I just showed you on Meta. A similar tactic, you find local high that formed and then the next lower high and then base the downtrend off of that. You can see it's been respected numerous times. Actually happens to be the exact price that QQQ opened on Friday. No surprise there. And we retested it, found a support end of Friday. You want to see it hold above this for upside continuation here on NASDAQ. That's my plan for this week. If we can hold above it, especially through the initial earning for the Mag 7, since we have some big earnings this week, Tuesday through Thursday, then I'm looking for continuation a lot higher, looking at call positions on QQQ. Regardless, won't take any more of your time, and I'll see you hopefully in the webinar next week. If not, I'll just see you in the next video.